following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. S&P off a mere 3.5 points. Volume still rather low today, 2.2 billion shares. Yesterday, the volume was low. What did we have this morning? Well, we dipped down to 2050 on the S&P cash. And guess what? I was talking to one of our subscribers today, and I think it was about 15 Eastern. And I said, wow, they gave a crash and no one came. 550 million shares at that time. Normally, if you would have had a move of 20 points in the S&P cash, you probably should have had by 10-15, somewhere around 900 million shares. So it was about half of what I was looking for. Of course, we're going into quad witching. I think this is the first half of the shoe to drop. Tomorrow, probably see a short squeeze into it. How high? Hard to tell. We got a lot of shorts still trying to pile back on. There's nothing like getting everybody all hot and bothered about the British exit, terrorism demands, to get everybody in a lather. Now, the problem is, what if you can't get them to sell? Can you have a crash without anybody selling? That is the problem. My views on that we will talk about in a minute. But that's it in a nutshell. We're going into quad witching tomorrow. It is seldom down. Sometimes it's flat. But I think we got a lot of people with a lot of big short positions on and hopefully we're back. Very weird stuff happening this week. But, yeah, what else can you say about it? Not too much. We'll just persevere. And, of course, it's the man trying to keep me down. Anyway, what else do we have out here? Well, hopefully you heard that if things go my way, that we'll have money coming out the wazoo tomorrow. In the meantime, if it doesn't go my way, I will have some many, very small losses. As always, we like to join together about this time.
The following takes place between 2 p.m. and 3 p.m.
I didn't hear anything today. Nope. Let's get to a bit of history.
That it's all just a little bit of history repeating.
On this day in 1903, Henry Ford launches the Ford Motor Company. It includes 12 investors, including a coal dealer, a carpenter, a man who made windmills, and, of course, the rest is history. The most interesting thing to me about Henry Ford is he may be one of the first true disruptors. There were a lot of inventors before. There were other motor companies too, but where pretty much everybody, including the light bulb, was, and even the radio, was kind of an invention. No one else had it. There were many people trying to get in on the ground floor of building automobiles. And he took the most disruptive approach, i.e., trying to make it as cheap as possible, not adding too many issues. And I even took him to to heart in my business activities in the 90s. That was get it out as quick as possible, have as few additional features as possible. We can add them later. And I had some 4 revisions of some of the products that I oversaw. Just keep making it better, but make sure that you get it out there. Start making money now and fix the problems as you can. Don't wait to be perfect, which is kind of very different than maybe the Apple version of that today, which is will only, or at least the Steve Jobs version of Apple before he died, which is we'll only release it if, quote, quote, it's perfect. They were never perfect, but they were very good. He looked at every thing that a user would see and basically was very interested in the customer experience. Today, they call that the out-of-box experience, i.e. when you buy it and you pull it out of the box, how good do you feel? Mostly because if you're going to refer it or give a reference or write a review, it's mostly that first 5 or 10 minutes of either having the car or pulling something out of the box. Is it easy to understand? Is it confusing? Is the packaging actually hard to open? There's a lot into the whole idea of the out-of-box experience. Henry Ford tried to make everything as simple as possible, really went after manufacturing to make sure it was the most efficient that he could make it. And as we said, the rest is history. What else do we have? You remember Windows 3.0? Hey, I wasn't a real Windows fan until probably the mid-90s, maybe even late. Maybe in 2000, I used other things. But as always, we don't want to meander down too many roads today. I said we would discuss some of the things that I thought were interesting and maybe an alternative theory to what is going on in the markets. The most interesting thing to me, of course, is the dollar index. That dollar index, we're going to break here. We will be back after this short commercial timeout.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, we've just gone positive into the black on the S&P cash, so quite a reversal out here today. As I said yesterday, very interesting to see the action in that many people on Wall Street, many of the option market makers were going full tilt boogie, thinking that we were going to go to 2120 today, or probably tomorrow actually, into it in the last 30 minutes. It just makes me think that maybe someone had leaked the information on the Japanese not doing anything and the big push down. Maybe someone has loose lips. There were no sunk ships, though. But my alternate theory is this, and that is that I'm pretty sure that we're going to see the British leave the EU. Contrary to all the yelling and screaming and trying to scare the elderly to death by the UK Prime Minister, I think it's going to be a net positive for the citizens of the UK. They put in right now about, they only get back about 70% of what they put into the EU. So therefore, there's going to be about an extra 30% if everything just remained positive. One of the big things that I think started turning the market around were some market big shots that had been predicting that the sterling would drop 40%. We're now saying maybe 5 or 10%. And maybe they're talking their own book, but I think it's well overblown. To me, the weaker states out of the EU, out of the British leaving, are the rest of the EU that think that their brand of socialism will work when in 6,000 years of recorded history, it has not. You know, and as Margaret Thatcher said, eventually socialism fails because you run out of other people's money. The UK has been putting huge amounts of cash into this. I'm just wondering when the Germans give up on keeping the socialist, Western socialist semi-democracies afloat over there. But my thought is that a lot of the people, especially in the EU and in the euro, are converting those to dollars. Those dollars will be sitting over here, and they're thinking, well, maybe we'll buy some treasuries. But my guess is they're going to say, hey, a quarter of a point or half a point or whatever we're going to get out of our cash is not enough. And they're probably going to dive into the deep end and start buying U.S. equities. I suspect that goes on for a little while. Once everybody figures out that the con job of telling everybody, and Henny Penny too, that the sky is falling for England, everybody will start scratching their head and going, well, maybe this is a good opportunity to sell our equities here in the United States and then take that cash back and put it back in there where everybody lied to us about the end of the world because of Britain leaving the EU. And that is what kind of makes me think that I'm not exactly sure how long it can last, but I think we may have a small flood or deluge of capital. And when the reality does not match the fire and brimstone, bodies raising from the grave, dog and cats living together, that we may continue to see, that cash then come out of the United States get repatriated. And at that part, I wonder if we have not made some kind of big time high in the market. But an alternate theory, I can say that other people are saying that the world is coming to an end. Probably a little overblown. Is the market weak? Yes. Is Janet Yellen weak? Is the Treasury weak? Yes. Does not mean they are completely out of bullets, though. I think they still have a few rounds left in the chamber. And in for a penny, in for a pound, if you're both the Fed and or the U.S. Treasury, trying to make sure that the economy kind of holds up, at least to the election, so your legacy is more important than, of course, what should actually be done for the U.S. taxpayers. Anyway, that's kind of the beginning of it. I want to start looking at some stocks out here. But that's kind of it. 2.3 billion shares, maybe a kind of a tide coming in for a little while. Could be the summer, could be 2 weeks. But we shall see. I just have a sneaking sensation that once Cameron started yelling and screaming about all the retirees being penniless out in the street and starving, that probably was the low tide mark in believing the end of the world, because British would not be part of the Brussels giant conspiracy. Just a thought, an alternate thought. But why I had a bunch, and still do, and was buying out of the money calls for the last few days, and getting a few more getting ready to go into the money here. But the one I bought this morning for the newsletter, think it's going to do well. 45 cents to what I hope will be $2. Anyway, let's take a look at some of the stocks that have been moving out here. Ameren, of course, a big play on utilities. This one has been kind of holding up at the highs. Wanted to see how this did. Again, fear stocks, anything that you have in your kitchen or bathroom normally does well when fear is at a high. It is somewhere to go hide. As I said, I think maybe the U.S. is that kitchen and bathroom equity stocks, maybe for a few weeks, maybe for a few months. We'll have to see how this works out. But April 4th, $51.06, 2.6 million shares on that date. A couple of days ago, we had 2.1 million shares. It's still kind of floating around here at the highs. But over the next couple of days, certainly we'll be watching that one. To what else out here? We've got on the downside, China Unicom. I wanted to see how some of these stocks actually did, especially with the huge move down. What is it? Singapore or Shanghai? It was Shanghai, I think, this morning that had it. January 20th, $10.12, 710,000 shares. Little hammer candle out here. And what was the close? Very close. You want this thing to close above $10.12. And what is it? Just above $10. So watch this. CHU. Doesn't look all that bad. Energy is about the same on the way up as it on the way down. Just means that maybe we don't have enough energy to blow out some of these lows. And China being, and of course Japan, the Nikkei off 3%, one of those issues. Want to check in with our favorite Deutsche Bank out here. We talked about how the volume has been so light in some of these stocks over the last few days. And again, maybe well overblown. Where's Mr. Deutsche Bank here? Draw that chart. Come on. Do I want to go to this? I think I do. Come on, Mr. Deutsche Bank. Pull up. There we go. You know, the volume you really need was about 10 million shares from the February 9th low in Deutsche Bank. 10 million shares, and what do we have the last few days? 6.4 million shares, 5.8 million shares today, yesterday, 5.5 today, and now back into the trading range. You got to be kind of wondering, maybe a little bit things that make you say,
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And as we come back, I wanted to look at Wells Fargo WFC. See how this is doing. A lot of these had made fresh lows, and actually not a bad looking chart out here for Wells Fargo. You had a nice gap up. The 12th of February, sign of strength, 28.5 million shares. We got into that candle today, touched the gap up with 10 million shares so far. So, man, it's, I dislike that the energy did pick up on this last leg from May 31st back down to this low out here. But we went back to that, and it wouldn't be going along it. But at this point, I would have to say that I would have to wait for a better setup to be short Wells Fargo. It is, of course, one of the strongest banks out here. See if there's anything else out here that is in the news. That was the one I wanted to take a look at. And then I wanted to actually look at some of the, where's my, hang on a second. We move some stuff around here. A little housekeeping. Got to keep an eye on the trades at the same time doing a radio show. Don't try this at home, children. Okay, what else do we have? Oh, that's what I wanted to do. I wanted to go back and look at these Euro banks. We looked at those. Let's take a quick look in power. Well, the Spain banks look weak. Deutsche Bank off 0.5% now, not a big deal. Barclays 0.2%. Let's look at SAN. It's the strongest of those today. Well, very interesting. Again, I think we brought this up. Said, well, not a bad looking candle out here. You would have liked to seen a little bit more volume than. You can almost make a case out here. I don't know if these things are going completely hugely higher, but certainly it looks like you can maybe say that the worst is in right now. You're into a gap that happened on May 8th, or was that? No, that would be April 8th, that had 3.7 million shares. You have 5.96 million shares. I don't know if all these banks are going to be doing well, but certainly it does not look like in the next couple of days these things are going to blow out. The other one that's gone positive already today is Credit Suisse. This one actually looked fairly good. In a couple of days out here with decent volume below the lows, but didn't really, really blow out those. Again, a close back in these trading ranges to me on Credit Suisse. Any close back in the $12.56 raise and above says that you at least have a partial rejection of lows in these. Let's take a quick look at RBS too. RBS. Because, if everything was going to hell in a handbasket, these certainly should have been able to blow out today. 2 million shares, but certainly it was lower this morning and higher. The volume looks like it came in the afternoon on that one. So quite a few things. If you have anything you would like to email me, do so at path@tfnn.com. Question on Tesla. I want to Wayne from Dallas. Wayne from Dallas. He thinks that Windows 10 keeps causing my display problems, and it's not. It's actually Skype. For some reason, it has issues. Maybe a newer version of Skype will come along. What else do we have out here? Tesla Motors. Maybe an issue between Skype and Hotcom, actually. I think a lot of these screen programs, when you run them at the same time, end up causing issues. Anyway, Tesla. What do you think about being short Tesla? I just don't see a great deal in this thing right now. I would love to see back up about 240 before I tried to pull the trigger short on this. It's just everybody and their dog is continually short Tesla. It's always on the list of the top shorted stocks. I haven't looked at it in the last couple of days. Let's take a quick look. Okay, 15% of the shares yesterday started with a short sell. The day before, though, was 24 on the 10th. And not a good sign if you can't start knocking a stock down with a fourth of every trade starting off as a short position. Doesn't mean they went home that day. But I dislike all this very heavy shorting because, of course, all those folks have to come and cover it back. So I would say not right now. If you were thinking about shorting Tesla, I would like to see one more move up. Doesn't mean it won't fall off the edge of the right-hand side of this chart. I just would like to see some shorts cover and not see a bunch of shorting in this stock. I've been making money over the last month or so just waiting for stocks to get short squeezed because we don't have a huge movement or a trend in this market. And I continue to think that that is what we're looking at. And that is declining volatility, although you wouldn't notice it from this week, in the actual range of the S&P. And until we get some kind of thing that makes me think we're breaking out of that range, I can continually see too many people getting way too short too many things. And again, into quad witching tomorrow, I don't think I would be shorting anything. It is normally you have about an 80% or 85% range of stocks through expiration where there's a bullish bias, maybe 80% or 75%. It's about 10% higher during quad witching. So if you're really bearish, I would wait Monday, Tuesday for that. But I'm just not feeling the bearish sentiment right now. I may be the most bearish person in a while, in a very soon while, but not today. Just as I've said for a little while, we're in these doldrums where the wind blows one way one day, blows the other way the other day. In fact, during the day, it blows many different directions. As today, I just I can't see that we have made any kind of determining chart pattern that would say that we are in a trend. To me, we're just in this 2050 to 2120 area in the S&P cash, and every time everybody gets way too short, the market literally is too short to go any lower. And everybody says, hey, this is a good way to run some shorts, make some easy cash, and that's it. I don't see anything different. Quad witching tomorrow, and that's what I will be all over. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As I said in the den, but I will repeat it for our listeners from shore to shore. That is that as far as I see, I get my options data about 8 o'clock at night for the entire market. If I wanted to spend like $2,500 to $3,000 a month, I think I can get it almost real time. But to me, not worth throwing $3,000 at it. I don't trade that quickly either. I like to see things set up and then check them out. So I don't know if it would do me any good anyway, other than probably jumping the gun a little. But at night, I will go through them and see what the option markers and option market makers have done, and see where at least they would like to see the market move tomorrow. Now remember, it is a quad witching. Futures expire at most of those expire at 9:35, whatever the settlement price is. Once all the stocks have opened, then of course options expire at the end of the day. So you can get a lot of intraday action going on depending on how hedged people are against futures positions, with option positions, with just about everything expiring tomorrow. Look for some fireworks. I thought today would be the big day, but it certainly looks to me like tomorrow is not going to be the only day where we see a lot of movement. And option market makers have, like I said yesterday, we're all kind of looking that maybe they thought the market could go to 2120 by Friday. I think you have to bring those expectations down to maybe 2100 for tomorrow. But my guess is there are a ton of people on the short side, and it would not take a great deal to push this market up for a couple of days and kill off tons and tons of options positions that are on the put side of the ledger. What else do we have going on out here? UBS. Another one down here at the lows, light volume, pop back into the trading range. So, can you say a great deal more than that? I don't know if you can. Let's look at some other stocks here in the U.S. because I haven't had time to. I've been trying to tend my knitting. I always wondered what that was. It's not tend a kitten. I guess it's knitting, isn't it? It's what it's supposed to be. Would have liked to seen a continuation within 3 days of Microsoft's big move down. That was the 83 million share day down. But, well, if you were bullish on here, you saw it go to $49.06, close back into the trading range, go sideways for a couple of days. Today, open lower and move back higher again on lighter volume out here. I'm not expecting this thing to rush right back up. And I'm not really bullish per se on Microsoft. Could it go higher? Yes. Am I going to risk $50 to make one or two? The answer is no. This thing is probably not going anywhere upside big, but at the same time, as long as Microsoft continues to do well, this trading range is probably going to be here for a while, and that's that $49 to $56 range. It's going to take a bit to get through this gap down, though. It did happen with fairly significant volume, but someone mentioned that they had Windows 10 in the den. We're pretty much close to them with the end of giving it away free. In fact, I think it's June. I think it's either July 1st, maybe July 1st is the last day that you can upgrade for free. After that, of course, you'll have to pay the license fee, which I think is about $100 or so. More interesting to me, though, is, of course, since it's not free, everything that they go from then on will be a price that they will collect. That $100 will add up over time. The other thing is that they have their anniversary update also coming out, which I think is going to be like the 27th of July. That anniversary update adds some of the features like a store and some other features for them to actually start making money off those customers that got all the free upgrades to Windows 10. And I think that could be enough just to keep them in this upper trading range for a while. But somebody asked me actually in the den too about Windows features and some of the things you can do. If you are a trader and have Windows and you're all kind of wigged out about whether or not you should be running Windows 10 because, of course, they're spying on you and everything, there is a program called Spybot Anti-Beacon that will turn off all the telemetry back to Microsoft. You can get it and it's free. And you just tell which ones you want to turn it off and which ones you don't. I have pretty much everything turned off. But that's it. Oh, it is Thursday, isn't it? Andy Heck has a special guest today at 5, and it is somebody famous. Yeah, infamous? Famous. You'll recognize them. Andy will probably talk about him. I will only say he's a special guest that appears many times in the 5 o'clock hour of CNBC. And that's it. Spybot Anti-Beacon is the name of it. I'll put a link in the den out here. Andy already talked about your great article about George Soros on Seeking Alpha. So check that out too. I'll put a link in the den out here. If anybody wants a link to it, you can email me at path@tfnn.com. But it will turn off all the telemetry. You can go through it hand by hand, but someone's already made a program to do it all for you. But that's interesting. Anyway, Microsoft about there. But like I said, 29th, there's actually, what is it? July 1st, start charging for upgrades to Windows 10 and to the anniversary update, which will add a lot of new features and some ability for them to do things like rent movies. Some other things are rumored. We haven't seen it yet, so we don't know all the additional features that they will add to it. But it will become much more like Apple in the fact that they are going to look at you as a customer, not just as the product as Google does. So keep an eye on that. Okay, everybody's already figured that out. It's Dennis Gartman. Okay, Andy already dropped the beans. I thought we were going to make it a big deal. Dennis Gartman, good to be seen. Andy always says that because I told him how much it irritates me. Anyway, let's take another quote look, see if there's anything else out here. Let's take a look. I mean, a lot of these things have had huge turnarounds. I've got one eye, of course, on all my options that are expiring tomorrow. So I'm a little distracted, I will tell you that. But let's take another look at, got a request to look at Intel out here. Got a couple more emails. We'll get to those before the end of the hour. Intel probably could be a little bit better out here. Again, Intel probably has a great upgrade cycle coming with these new chips with Altera in it, the new memory, a lot of other stuff. I think it will at least hold it. I wouldn't be short it, but not a lot of bullishness in this one right now. Would have liked to see this candle do a little bit better. Maybe it does before the end of the day. We still got an hour and 10 minutes to go. Andy Heck, a special guest at 5 o'clock tonight. Make sure you check that out and his article about George Soros on Seeking Out.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And yeah, we got a lot of stuff going on here. As I said earlier in the day, I was busy buying out of the money calls, and it looks like I got some that are now in the money. I'm in the money. Anyway, we will continue to monitor the situation. That's when anything bad happens or good happens, whatever happens, and you're the president, that's what they send somebody out to always say. We'll monitor the situation. Well, I'm assuming you're going to monitor the situation. You're supposed to be taking care of it. What are you going to come out and say you're going to go off and go on a vacation now? I didn't expect that. Everybody's got to say something, don't they? Well, I'll try not to say anything. Let's take a look at the TLT. Let's let the chart talk out here. Man, is this interesting because, of course, we are in this big time gap, and we're getting ready for the market not just to whisper to us, but to shout. And that is this nice little doji out here today. They got 137.56, and you got 9 million shares. We could get a little bit more out here. 138.50 is the January 30th high. 14 million shares, but are we going to get 14 million today? 12 million maybe. We'll have to see. Anyway, that will be very telling out here. And, of course, looking at the banks that are kind of pulling back in here at the lows. We got a lot of moving parts. But as I said, to me, just way too many shorts, at least for the next couple of days. If I was bearish on the market, I would certainly probably gird my loins. That was always a weird saying, too. Gird my loins and wait till next week. I still think 2,100, maybe even a little bit over tomorrow, and it could go for a while. I would not be surprised to see all that cash leaving Europe on vacation and finding a way over here into the United States and then into our equity markets. There was a guest that Tom had on, Mr. Granville. He had a theory that everybody ran to the back of the Titanic, even though it was going down. I found it a very interesting analogy. To me, the idea that everybody's always, especially at the end of these kind of big bull runs, is always looking to make cash all the way up to the minute that the ship goes down. Will run. We've seen the whack-a-mole of the last few years of everybody running from country to country to get a few more pennies. Let's get one more dollar. If we just do this, we can make more cash. And risk continues to be a lower and lower priority. And like I said, we could see the markets up fairly strongly up here. The question would be when that whack-a-mole changes and suddenly Europe's down cheap. Everybody leaves the U.S., takes their cash with them, sells their dollars, buys euros. Could that not be the point where we actually see the tide truly change? I think that there are answers like that that could ring true. Anyway, we're kind of getting close to the end here. We're up 2 points in the S&P cash. Volume remains quiet, 2.5, 2.6 million shares. Quad witching tomorrow. Andy's special guest at 5 o'clock. We got so many things going on here. We got more things than Carter has pills. But looking at these charts, you got to start saying that there is some big news coming down the pike. A lot of people probably think it's the British exit. I think that's already baked into the market. Now we're looking to see what the truth is instead of what they're trying to sell us at the highest levels of politics. In the meantime, sell when you can, not when you have to. We'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.